Hello. Perps resetting in 2022 for REITs. What a difference a year makes, right? It's quite an interesting year in terms of perps issued by the REITs, in terms of the resets. And in particular, let's look at two cases. First REIT and ESR-Logos REIT. ESR-Logos, of course, is the combination of ESR REIT and A-Logos. So these two guys have quite interesting movements in the perps space this year. So let's look at it. I always remember in 2020, right, just right after the COVID pandemic struck, Ascott REIT reset their perps, and the reset rate was crazy, right? 3.07%, for perps. And this was lower than the 4.68% that the coupon rate was when they issued the perp in 2015. So, well, 3.07%. Look at the interest rates nowadays in this environment. It's really way more than 3%, right? So Ascott really got a very good deal when they reset the perps in 2020. But you can see a difference 2 years make, right? This year ESR-Logos was I think the most active involvement in perp resets. They issued two perps this year actually. This perp was the second one actually. The resetted the rate, so it was 4.6% when they issued it, and now they reset it to 6.632%. So it was a 2% jump, right, in terms of the rate. So on $150 million of notional, so therefore they will have to pay $3 million more of interest costs going forward for the next 5 years. What was interesting was the formula used to calculate the reset rate. Apparently, it was a 5-year Singapore SOR plus 2.6%. So if you take 6.6% minus 2.6%, you end up with 4.032%, right? And this was a reset on the 3rd of November, right? So I went to dig. You can see that the 4th of November, the 5-year SGS was 3.3%, right? So that means the 5-year SOR was 70 basis points higher than the Singapore SGS. So this was quite interesting because the 5-year SOR is not very observable for me lah, because I'm a retail guy, right? So in this environment, apparently the SOR is 70 basis points higher than the SGS. I think it has something to do with the dollar Sing exchange rate and the forward points. So I think in this environment when the dollar is strong, the SOR is higher than the SGS. It's a minor fact, but I think it's still quite interesting to observe lah. They also have another perp, and they issued it before the resetting of this perp, right? So they issued this one at 5.5%. Notional was $150 million as well. So I think the previous rate was around 4+% as well. So you can see the pickup, the jump in the coupon was around 1% here. So they're quite lucky to issue this one earlier though. So they got away with 5.5% for this one, and for the second one they have to issue at 6+% already, right? So in total, going forward, you have to pay 3 million, but something like 1.5 million here. So $4.5 million of interest cost more for the next year compared to previously. So that's gonna eat up into their distributable income. But nonetheless, I think it's still a good rate to issue it, because the perp is 5.5% and 6 point something%, right? So this is still much lower than the cost of the common equity, right? So if you look at the common units, at one stage it just collapsed to like 32 cents or something, right? So that's like close to 10% of the distributable dividend yield, So if they have to issue common units to pay back the perps, then it's going to be hugely dilutive. So on the capital management front, I think it's still correct to pay higher for the perps than to redeem it and issue new equity. But nonetheless, I think I see this is why the title of the video was a difference. What a difference 2 years make, right? If they issued it last year, they would have got away with a much lower reset rates. But nonetheless, it's just sway because they cannot change the issue date anymore. So this is for ESR-Logos. I think first REIT was also quite interesting because instead of issuing new perps, these guys were the only guys to buy back their perps. Quite interesting. The notional was $60 million, and they offered to buy at 70 cents to the face. So I think the market it was trading at around 50+cents. So they offered a market premium to buy back the perps, but the perps were at a discount to the face at 70%, so a 30% haircut. So in the end, around half accepted and half didn't accept. So it's understandable, right? For these guys, while the perp was trading around 50+cents, so therefore they sold it at 70 cents, right? So they make a profit, especially for those people who have bought it at 55 cents. For those people who didn't buy at the low level and they bought the initial issue, I guess this guy is quite understandably didn't want to take a haircut on the principal, right? So they rejected it. But nonetheless, around half accepted, half did not accept. So first REIT will just enjoy some interest savings, right? Because they bought back their perps and they don't have to pay interest on this guy for anymore. But nonetheless, I think the rate is not very high as well. So they reset it in 2021. So you can see that this guy's enjoyed the benefits of lower rates in 2021, right? The reset rate was around 4.98%, and you can see the 5-year saw in 2021 was just a 1.05%, right? Compared to what we saw just now, almost 4%. So you can see in 1 year, right, the saw rate went up by 3%. Wow, so actually the rate here isn't that high, but nonetheless, the manager will still enjoy some interest savings from buying back the perps. But it's quite smart as well, because if you look at the formula, right, it's 5-year saw plus almost 4%. So if in 4 years time in 2025 the rates continue to stay around 4%, then you have to pay 8%, right? So I think it's quite unlikely the rates will stay high for the next 4 years, but you never know, right? Maybe inflation go bananas and maybe Putin go nuclear. So it's still quite smart for these guys to just buy back the perps, I think. Nonetheless, but even after buying back, the gearing is still quite manageable. So I think overall it's quite a good move by the perp to just buy back the perps, right? And after this, they have no more perps. It's just pure debt. So well, I guess it's quite cool, quite clean, the balance sheet. So the previous rate for this perp was 5.68%. So well, it's still quite decent. I think though, what's interesting going forward will be the year 2025. You can see a lot of guys are going to reset their perps in 2025. Ascott is going to reset their stuff, which we talked about just now in 2025. And I think if you look at the guys like Ames, which I bought a lot of it recently. I talked about it in this video, you can go check it out. I think some other guys, a bunch of stuff like the Maple Trees also maybe have the stuff in 2025. Because a lot of these guys issued perps in the super low interest rate environment in 2020 and 2021, right? And I think land lease as well to fund the acquisition of GEM. So in 2025 and 2026, a whole bunch of perps will have to reset. So I think for perp space, right, 2025 will be the year to watch. It's going to be quite a quiet year for 2023 and 2024. But in 2025, this will be the year where the perps really strike. If rates stay high for the next 3 years, oh man, this is going to be quite problematic for the perps funds. So this is one space that the REIT investors have to watch out for and beware. So good luck for the year going forward.